Welcome to the Cedo Zone Akash Tokenomics Guide. My name is 𝗬𝗵𝘁, and yes, I just broke my left thumb, but that's a story for another time. Today, I would like to share with you my research on the AKT token, as I spent several days researching and digging deep into the Akash token. And yeah, at the very end, you will see whether it's a worthwhile investment or whether it's time to sell your AKT token. So before we dive in, a quick overview of what we're gonna cover today. So first off, I will give you a brief overview of the AKT token, its supply dynamics, how the token is distributed, who are the investors, how does the inflation of the token work, and where we are in the unlock schedule. Then later on, we will dive into the token's utility and its revenue potential. I prepared some very cool spreadsheets where we will forecast the revenue potential of the Akash network, and I will show you how Akash can achieve multiple millions in revenue very soon. And then towards the end, I will give you a short glimpse into their roadmap and their most exciting projects they are working on, which is first Akash at Home, the Starcluster projects, and the involved Star bonds, another interesting investment opportunity for you, and of course AKT 2.0. And at the end of this presentation, I will tell you whether I'm buying more Akash right now, doubling down on my already existing position, or whether I'm selling. All right, let's take a look. So first off, many of you might already know what Akash is, but for those of you that are new here, Akash is a decentralized marketplace for cloud compute. So think of it as the decentralized version of AWS, Amazon Web Services, or Google Cloud Azure, but they are giving everybody permissionless access to high-end GPUs and CPUs. And what's the coolest thing of it, it's not only permissionless, but it's also cheaper than these Web2 hyperscalers like AWS, and Akash offers up to 70% cheaper access to compute units than AWS, for instance. And overall, Akash, the network, is built as a layer 1 blockchain on the Cosmos SDK. It is fully IBC compatible, which makes it interoperable with other blockchains that are part of the larger interchain. Some brief words about the history of Akash. So Overclock Labs, the developing company behind Akash, was founded in 2015 by Greg Ozuri and 𝗪𝗵𝗁, the two co-founders of Akash. Then, 2 years later, after working and tinkering with different things, they released the Akash white paper. And then, again, almost 3 years later, the Akash mainnet went finally live as one of the first Cosmos SDK layer 1 blockchains, which was a big achievement back then. I think only the Cosmos Hub, Kava, and probably another chain. So Akash was definitely within the first 4 to 5 Cosmos app chains. And then in August 2023, their mainnet upgraded to V6 and the support for GPUs went live. Initially, Akash started out as a decentralized compute marketplace offering access to CPUs, but then with the dawn of AI and like just a massive bull run that NVIDIA experienced, and there was the general shortage of GPUs, Akash launched and supported GPUs so that external developers could come to Akash and rent out GPUs for very little money. All right, now let's dive deeper into the AKT token. So briefly, currently Akash is trading at roughly $1.18, and it has a market cap of 330 million. It has a max supply of 388 million, and the current circulating supply is 278 million, which are roughly 71.5% of the total supply that are circulating right now. But nonetheless, as you can see here, the market cap equals the fully diluted valuation, since all the tokens are fully locked and there are no more future unlocks, and this number here will solely be reached by inflation. So everybody holding AKT tokens right now and staking them is not getting diluted, and therefore FTV equals market cap. So a few words on the investors and the funding history of Akash. So in March 2020, they held a private sale where they sold 10% of the max supply for a token price of 0.057. And yeah, this funding round was held at the FTV of 20 million, and the Overclock Labs team raised a total of $2 million. And if you do some quick math, you can see that these private investors, they are sitting on a 20x right now. And of course, we have to add all the staking rewards on top of it as well. And a few months later, in October 2020, as the Akash Network went live, they did a public token sale where they sold another, like not 1%, but 0.6% of the token, of the max supply for a token price of 35 cents. And yeah, there they raised 800K, and everybody that participated in this public sale made a little more than 3x plus staking rewards. So in total, Overclock Labs raised a little less than 3 million, which is not a lot if you compare it to all the massive funding rounds that are held these days. So the token distribution, as we said, at Genesis, or the Genesis supply was 100 million, which is roughly 1/4 of the total supply, and it was allocated to these buckets. Like investors got the largest chunk, then of course also the team and advisory, some went to the treasury, ecosystem and grants, testnet, so on and so forth. And here we see the public sale allocation, and all the remaining tokens, like 288 million AKT, are fully allocated to mining rewards. So everybody that participates in the consensus of this token, this network, and stakes their token, can get a chunk of these outstanding tokens. And here we see the token unlocks of the Genesis supply, so the tokens that were initially allocated to investors, team, testnet participants, so on and so forth. And it began, basically the day the network went live. And as we see here, at the end of March 2023, the token unlocks fully ended. So this means we have here with AKT a token that is fully unlocked. So all the vested tokens going out to investors, team members, community, pool funds, etc. are like unlocked and in full circulation. So there are no, you as an investor don't have to be afraid that investors are dumping on you. And all newly issued AKT tokens solely derive from inflation, and everybody has the same chances there. Just stake your AKT and you will earn some of these staking rewards. And here we have the supply schedule. As you can see, all the tokens have been unlocked, the vested ones, and here this big yellow bar is the inflation. So you see, as we move towards the max supply of 388 million, those tokens solely derive from inflation, and based on the inflation level, this cap might be achieved sooner or later. And back in the days, Greg Osuri, the co-founder, shared his thoughts, and he thought that the max supply might be reached in the next 30 years, which would put it somewhere in 2050. But again, it highly depends on the inflation rate. And talking about inflation, let's double click on that. So the current inflation rate on the Akash network is 8%, and stakers don't get inflated away since they're earning a staking APR that is higher than the inflation level at 10.33%. And as some of you might be aware, Akash has a very unique, similar to the Cosmos Hub, a unique dynamic inflation model, which ranges between a minimum of 4% and a maximum of 8%, depending on the bonded ratio, but more on that in a second. Here we see the bonded ratio, so of the entire supply, 107K are bonded, and like these 8% that are issued yearly are split 50-50 between the community pool and Akash stakers. So half of the inflation is directly paid out to stakers, while the other half is redirected to the community pool to fund various activities within the network. Now let's take a closer look at how the dynamic inflation works. So here we have this cool chart that helps you to understand better the dynamic inflation. On the y-axis, we have the inflation percentage, so from 0 all the way up to 12%, and here we have the bonded ratio on the x-axis. And here we see the band, so the min inflation right now is 4%, and the upper band is 8%. And here we have the targeted bonded ratio of 2/3 or 67%. So whenever more than 2/3 of tokens are staked, then inflation slowly goes down from 8% towards 4%. But if there are less than 2/3 staked, then inflation rises to incentivize AKT holders to put their tokens to stake, to secure the network, and to earn more rewards. But currently, as we've seen here, the bonded ratio is fairly low, but we are already at the upper limit of the token, of the inflation level. So even though we are currently in this zone here, we cannot go higher since we already hit the max inflation. So even though this target of 2/3 is not reached, inflation won't go higher because there is this artificial cap at 8%. And in the history of Akash, this band here varied. Just a few months ago, I guess it was between 8 and 15%, and the recent governance proposal reduced it. And of course, it's always due to governments, and it can always be changed in the future via a single governance proposal. Now, let's take a closer look at the token utility of AKT. There are 3 core utilities. So the first one is security and staking. You as a token holder can stake your token to secure the network and in exchange earn staking rewards. The second utility is compute. So what does this mean? You as an AKT holder can use your tokens to purchase compute, either GPU power or CPU power on the Akash network. So everybody that wants to interact with the network and rent out some compute needs to have AKT token for payments, and of course also to pay the transaction fees on the network you need the AKT token. And the third core utility of the token is governance. As we said before, if you want to increase or lower the inflation rate and you want to have a say on the future of the network and where it's going, then you as a token holder can cast your vote on all the ongoing proposals. All right, now it's getting interesting. Let's take a closer look at the protocol revenue. This, to me, is the most important chart when it comes to valuing the AKT token. As you see here, this represents the daily USD spent on the network. So basically what tenants or folks that are renting out compute on Akash are paying to the network. And as we see over here, for almost 1 year, tenants spent between 7 and 14K US dollars daily on Akash. And this is basically a 10x of what they spent last year, where the daily spend was between 1K and 2K. And this will be a key indicator going forward for Akash to exceed. If they cannot 10x the daily spend every single year, then they will have a pretty tough time achieving sustainability and just generally compete with others. But yeah, so far you see we've been bouncing up back and forth within this range, so it's really time to break out towards the top. And over here we see the accumulation of dollars spent on Akash, and in Akash's history more than $4 million have been spent. And as you see here, in late 2023 we had this first 10x acceleration, and then 1 year later we had this second 10x moment where basically the total USD spend just 10x, and now we should soon hopefully see another 10x moment. And it's very key to keep this in mind, because for a very long time I thought that this number here is network revenue, so that Akash earned more than $4 million in its history, but this unfortunately is wrong. These are total network fees, but it's not the revenue generated by the network. This number also includes all the money that goes to the compute providers. So if you want to understand where the revenue comes from, we have to take a look into AKT 2.0, which is also called taker fees. So here we have another graphic which basically says, depending on the payment method, as I said before, you can use AKT to purchase compute on Akash, but now you can also use USDC with AKT 2.0, since a lot of tenants requested for this feature. And yeah, whether you pay with AKT or USDT, a 1% or a 2% taker fee is like taken away and funneled back to the community pool, while the remaining 98% of all the fees are forwarded to the GPU or CPU providers. So only a tiny cut of this number here can be considered as protocol revenue. And here I've prepared another chart that beautifully displays the entire value flow of the Akash network. So up here we have the tenants, developers that are purchasing compute. Let's say this guy purchases compute for $100, then $98 are being forwarded to the compute provider or the host that gets paid for offering his service, and the 2% take rate or that cut is being redirected to the community pool, and then the community pool can spend like this protocol revenue for developer funds, other incentives to bootstrap the network, bug bounties, events, hackathons, or any kind of other funding, or also just forward them to stakers as a reward. And in the future, potentially, they could also use these staker fees to buy back and burn Akash. And here at the lower left bottom, we see inflation. So 50% of inflation is forwarded to the stakers to pay them some, or to compensate them for locking up their tokens and securing the network, while the other 50% are funneled back to the community pool, again to fund hackathons, bounties, and other network incentives. All right, but now let's take a closer look into the revenue numbers. As we've said before, there is the 1% taker fee on AKT tokens or a 2% taker fee on USDC. So for simplicity purposes, I just suppose it's a 50-50 cut, so the taker fee in this calculation will be 1.5. All right, so I suppose that the daily revenue or the daily USD spent on Akash is 10K. As of right now, so if we multiply that by the taker fee of 1.5, we see that the network is currently earning $150 of revenue. I know that's a little bit sobering. As I discovered it, I was a little bit perplexed as well. But this just says that Akash is still in its bootstrapping phase and like not generating any meaningful revenue. I mean, this is just nothing if you compare it to other protocols like 𝗪𝗵 or Hyperliquid. And if you annualize it, it would be a little bit more than 50K. But AKT is more of a growth play. So let's say they 10x their USD spend on Akash to 100K, then the daily revenue would shoot up to 1.5K, and annualized it would be already more than $500,000. And then probably 1 year later, if they can 10x their network fees again, then we would hit a daily dollar spent on Akash of roughly 1 million, which would then indicate a daily revenue of 15K. And if you annualize that, the number already looks way better with 5 million annualized. And of course, if we do another 10x, then this number looks even better and very promising. But I mean, that's probably some wishful thinking. And just to give you a comparison of the biggest revenue generating protocol out there right now, which is 𝗪𝗪, they are generating north of 2 million revenue every single day. So even though Akash would 100x their network capacity, they would annually only generate 5 million of revenue. So yeah, I just think that Akash is not the best protocol when it comes to revenue generation, unfortunately. But now that we talked about the revenue, let's look into the spending side, and especially the community pool spending, as I discovered something very curious, let's say. But yeah, let's take a look. So I literally couldn't believe my eyes during my research as I figured out that the Akash community pool spent over $12 million year to date in 2025. I mean, we're still in Q3 and Q4 hasn't even begun, and the community pool spent over $12 million by selling basically AKT tokens worth $12 million. So I thought to myself, I don't know, there must be a glitch or this is an exception. You know, in the past, everybody was going crazy on Twitter when the Cosmos Hub community pool was raided, or the, how was this validator called? I don't know, Cosmos validators that requested 30K from the community pool, and like it was a total shit show. But I never came across some AKT community pool FUD on Twitter. And then I went back to 2024, and there I discovered that the community pool had a similar spending pattern than this year, and over there they spent 17 million from the community pool, which is roughly $4 million every quarter, which is just insane. So yeah, if you want to take a closer look at the spending numbers, here I listed all the proposals that were approved this year, and here you just have spendings for a community program, community activities, you know, meetups, hackathons. Then here funding for ETH Denver and NVIDIA GTC conferences. Then here we have more event resourcing, community programs. Here another conference, Akash Accelerate, their very own conference. I mean, probably it's a mixed bag, you know. It's good that they hold their own conference, but I don't know, it's a bit weird, you know, if they just request all the funds from the community pool. I do think that Overclock Labs contributed something as well, but still, to me, that doesn't look too good. Then here, Overclock Labs again received some support from the community pool, but the bulk of the spending comes from like community growth marketing for just H2, so the second half, which is like 4.7 million. And then we have these provider incentives. So the community pool is giving out incentives to providers to come online and provide their GPU power on Akash. But what really like was mind-boggling to me when I saw here that there is a tenant incentive pilot. So I knew that they're always incentivizing providers to come on chain and provide their services, but now, I mean, they have to incentivize providers and tenants to use their network or like their marketplace. This just doesn't add up to me, or it's a flawed model. How will something like this be ever revenue paying or like just sustainable? But let's see. And here just another breakdown of the spendings in 2024, and here we see the bulk again is those provider incentives, 4.5 million, and here 10 million in provider incentives, and here some more events resourcing. And yeah, sorry for this little rant, but it was just so weird to me to see all these numbers, and then you see the AKT token price just go down only. And I mean, this is substantial sell pressure, and this really made me overthink my AKT investment thesis. As we've seen, the revenue is not brilliant, and then at the other side, you're heavily like draining the community pool. I just think there are better investment opportunities out there. But to the team's defense, Akash Alpha, which is a very kind guy, and you should definitely follow him for more Akash Alpha. He interviewed the Overclock Labs COO, Cheng Wang, and he confronted him like about the drainage of the community pool. And the COO came up with reasons why they're doing it, and the TLDR is that right now is the time to invest in network growth and onboarding new users, tenants, and providers, and that's the reasoning behind this community pool spending. All right, so probably I was a little bit too harsh, and yes, we all know that the AKT token went down over the last year from its peak. I guess it was even above $5, but hey, 𝗪𝗺, is it really the community pool sell pressure, or are there other trends or factors playing into it that might have caused the downfall of the token? And if you here compare the AKT token to other DePIN networks or decentralized cloud providers, I mean, they all have a very similar pattern. So either they're all draining their community pools, or there is something else that these charts tells us. And I think that there was just this massive hype around DePIN, decentralized compute, as the AI bubble popped up the very first time with the historic rise of NVIDIA. In that time also AKT and all the other tokens just had this meteoric rise. And since then, I wouldn't say that the bubble popped. I mean, NVIDIA just kept growing. But if you take a closer look at these networks, they're not generating revenue, unlike NVIDIA, and therefore I think that the bubble just inflated, and all the excitement and the hype vanished. And talking about other folks that are competing in the same market, here is a beautiful overview by 𝗪𝗫 of the DePIN networks, and especially here the compute networks, and we see it's a highly competitive field with lots of competitors like Kudos, Flux, Render, and many more, and also other newer players that are not even listed here like IONET or Ether. And let's not forget all the Web2 competitors like AWS, Google, or Microsoft Azure. So here just a brief overview of where you can buy or sell the AKT token. Those are all centralized exchanges. We have some big names like Coinbase, Get.io, Upbit, KuCoin, but the biggest one, like Binance, is still not there. And of course, if AKT were to be listed on Binance, that could lead to a massive, massive bump. And we have one single CEX where you can purchase AKT in a decentralized way, fully on-chain, which is 𝗪𝗵𝘁. So now let's take a look into the roadmap before we come to the conclusion of our presentation. What are exciting things that the Akash team or the Overclock Labs team and the community are currently working on? So the first one is Akash at Home. This is an initiative or the vision to let home users participate as providers in the network, contributing their GPU power and simultaneously earn some fees. If you at home have some lighter edge compute devices like gaming PCs, laptops, or small servers, you can simply connect to the Akash network and provide your compute resources there, and in return earn some rewards. And this, of course, helps to grow the overall supply on the network. It cuts the costs and it improves its privacy and decentralization features, or the decentralization of the network. And this feature is estimated to be completed towards the end of the year. Secondly, another very promising roadmap milestone is Starcluster. So think of Starcluster as this global mesh of decentralized compute nodes spun all around the world that are contributing to the Akash network, like displayed here. And let's say that you're somewhere here in Europe or wherever, but all the nodes are sitting in the US, and it takes a long time for these compute resources to get to your place. But now, if everybody around the world contributes to this network, then of course here it takes less time for those resources to arrive to your place, which again improve cost and make the network just much more resilient. And this all ties directly into the feature that we covered before, Akash at Home, where everybody can contribute edge compute to the network supply. And in order to bootstrap this Starcluster project, the team will issue so-called star bonds to crowdfund high-end GPUs initially. And more on star bonds in a second. As we are looking here at the Akash Starcluster roadmap, we see initially, like towards the end of this year, they will bring online high-performance deployments. And in order to raise money so that the network itself can purchase these high-end GPUs, the team will issue the star bonds, as we see over here, which is nothing else than, like, you can compare it to a government bond, where you give the government money and they pay you back your money over time plus some interest rates. But here you're giving your money to Akash, like you're investing into GPUs, which Akash will purchase on your behalf and then rent it out to the broader world. And you, as a star bond holder, will then participate in the revenue generation of these GPUs as they pay you back some dividends over time. And that's like for bootstrapping. And then going forward, they will move from the high performance deployments into the edge nodes that are deployed in base stations and network closets. And then later on, they will tap into the long tail of compute, which can be found at home. Again, talking about Akash at Home. And the final feature, which is very crucial for the success of Akash, is confidential compute. Currently, if you run apps on Akash or train your large language models or just do some image generation, whatever, this data is not entirely private. That's why the team is working on TEE, which stands for Trusted Execution Environments, so that it ensures everybody using Akash can be ensured that their data runs in a private locked room, so that even hosts or like the compute providers cannot peek at your data. And this is very critical for AI workloads and other sensitive data like customer files, access keys, or healthcare data. And I didn't know that before, but during my research I discovered that like bigger tenants are not willing to use Akash for now, since their data might get leaked to the different providers, and that's way too risky for them, so they prefer bigger providers like AWS that already introduced some privacy features in the past. And of course, this is very critical to increase the network's trust and of course its privacy. I hope you're still with me. We are at the very end of this presentation. So yeah, let's sum it up. What are the good points about Akash? What makes me bullish? So first of all, there are no more token unlocks, which is pretty good. Most other coins that are highly VC backed, they have a long outstanding token unlock schedule, which is obviously not good. Akash doesn't have that at all. Then Akash is like underpinned by this explosive narrative of AI and DePIN. Even though it's currently cool, it can always pop up and become super hypey, so I wouldn't count that out. At the moment, especially currently with all the AI developments, AKT is always good for an unexpected pump. And of course, there are already promising apps building and deploying on Akash, like 𝗪𝗵𝘁, which is a private LLM, knows research, like bleeding, a decentralized AI researchers, or 𝗪𝗵𝘁, a virtual world where you can host all kind of events, community hangouts, or play games together with your friends or any other community. And of course, they have a very promising roadmap if they manage to roll out Akash at home so that everybody can contribute to the network. If they can implement confidential compute to make the network more private and secure on top of the Starclusters to just onboard these high-end GPUs, then we could really see explosive growth in the months and years ahead. And finally, Akash has just a super crack team with 𝗪𝗵𝘁 at the helm and all the other folks working there. But of course, there are also some challenges that the project is facing. First off, there is fierce competition in the compute marketplace, not only in Web3 as we saw before in the 𝗪𝗫 graphic, but also from Web2 with hyperscalers like AWS, Google, and Microsoft Azure. A second major roadblock for the success of Akash is that sooner or later the network has to generate sustainable revenue, because they're still subsidizing the GPU providers and lately also the tenants to come on-chain and use their services. You can just not do that forever, because eventually the high community pool spending will just drain all of your resources. It will deplete your treasury and just drag down the token price step by step. And even though you keep inflating your token and keep redirecting half of it towards the community, if the token goes down, then all of a sudden your community pool and the treasury becomes worth less and less over time, and you cannot play this game infinitely before you run out of resources. So now, 𝗪𝗵𝘁, what are the future outlooks for Akash? I still think that Akash is very early in its growth and network expansion phase, so it's too early to say whether Akash is a success or a failure. I personally sold most of my AKT bags doing this research because it just didn't add up to me. At the one side, they are generating barely any revenue, and at the other side, they are highly draining the community pool and causing massive sell pressure. So I thought there are better investment opportunities out there right now, and I also communicated that to 𝗬𝗪+ members. This wasn't an easy decision for me, since I'm a AKT holder for many years. I bought most of my AKT around 50 cents, and I guess it was my first token with major size that I did a 10x on. But of course, I didn't capitalize on it. I just sold a little bit on this meteoric rise all the way to $5-6, but way too little, and I round-tripped most of my gains. Now I'm still 2x up. But for now, with zero network revenue, massive community pool spending, dragging down the price, I'm no longer confident holding this coin, and I just think that there are better opportunities out there. But I will keep a close eye on the AKT token, on the network growth, and I can always rotate back as I will stay nimble in my holdings. Key metric I will observe going forward is whether Akash can do another 10x in daily USDC spent on the network. Here we had the first 10x, the second one, but now I don't see this chart breaking out towards the higher end. And yeah, for the time being, I remain like bearish or neutral. But as Greg Oguri said in the past, they are aiming to 10x the network capacity every single year. And the moment I see this chart breaking out, I will definitely be back. But for now, I don't see the signs here. And just keep that in mind. If you do 10x's after 10x's, then in 2 years that's a 100x, and if you then do another 10x, then it's a 1000x in only 3 years, which just showcases the strength of compounding. But yeah, let's see if they can pull it off. Then I will definitely be back as a back holder, but for now I am not super bullish AKT, to be honest. Thanks for sticking around, and I really hope that you got some value out of this AKT Tokenomics guide. If you have any questions, please drop them in the comments below. And if you would like to get early access to these kind of reports or propose other tokens that I should take a close look at, join us at 𝗬𝗵𝘁, where we openly discuss interesting investment opportunities, lately mostly outside of Cosmos, where I share my personal portfolio holdings, all the changes that I'm making in real time. We just spotted 𝗵𝗁 very early, as well as Hyperliquid, and 𝗪𝗁 shares his holdings there as well. And we just cover all things DeFi, airdrops, promising NFT mints. So if you want to be in our so-called crypto safety zone, please join us there. And otherwise, yeah, I will catch you in the next YouTube video. See you there. 𝗪𝗵𝘁 out.